Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about NETGEAR INC quarterly report. NETGEAR Inc. offers a wide range of connectivity solutions across various segments. The company's main business areas include connected home, Wi-Fi routers, home Wi-Fi mesh systems, Wi-Fi hotspots, digital displays, broadband modems, and more. NETGEAR for business, plus Pro AV solutions, plus Pro routers, plus enterprise-grade access points, plus Ethernet switches, plus cloud-managed or standalone access points, plus remote management software, NETGEAR Insight, plus controller, NETGEAR Engage controller, additional services. Cloud-based cybersecurity and networking solutions for managed service providers. The company markets its products through various channels, including wholesale distributors, traditional retailers, online stores, direct market resellers, value-added resellers, broadband service providers, and its own direct online store. The significant increase in NETGEAR Inc.'s stock price over the past year can be attributed to several key factors. A major legal settlement with TP-Link and improved guidance led to a substantial upward revision of Q3 revenue and operating margins, causing shares to soar by over 30%. The company's strong Q3 financial results, which included a 27.1% sequential increase in revenue, also contributed to the stock price appreciation. Additionally, NETGEAR's growth in its NETGEAR for business segment, expansion of recurring revenue streams, and strategic transformation towards intelligent solutions and cybersecurity have bolstered investor confidence. The company's ability to exceed CONE 2025 forecasts further solidified its position, resulting in a significant increase in stock price exceeding 49.85% over the past year. The primary drivers of revenue growth or decline are multifaceted and influenced by various internal and external factors. Market trends, such as shifts in customer purchasing volumes and expansion into new international markets, play a significant role in driving revenue growth. However, increased competition from online retailers, DMR channels, ODMs, contract manufacturers, and competitors with extensive distribution channels can lead to revenue decline. Regulatory changes, cybersecurity risks, intellectual property rights issues, financial risks, environmental regulations, government policies, economic conditions, natural disasters, and health epidemics also contribute to revenue fluctuations. These factors can either positively or negatively impact a company's ability to generate revenue, depending on their preparedness and adaptability. To mitigate the effects of these drivers, companies must stay informed about market trends, regulatory changes, and emerging risks. They should also invest in cybersecurity measures, protect their intellectual property rights, and maintain a strong financial position. By doing so, they can better navigate the complex business environment and achieve sustainable revenue growth. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. Despite the lack of detailed information on the causes behind this negative trend, it is clear that the company has been unable to produce sufficient profits from its core operations to cover its expenses and investments. This raises concerns about the company's long-term sustainability and financial health. The company's financial performance reveals a mixed bag of results across regions and segments. On the positive side, the Americas, EMEA, and APAC regions all experienced significant revenue growth, with the Americas leading the pack at plus 15.6%. The enterprise segment also performed well, with a $12.3 million increase in net revenue. However, within the APAC region, there was a notable decline in performance, with a 12.4% decrease in revenue and a drop from $22.3 million to $19.54 million. Additionally, the home networking and mobile segments experienced significant declines in net revenue, with the former seeing a $5.1 million drop and the latter a $5.5 million decline. The company has made significant acquisitions to expand its operations, including the purchase of Axiom in the second quarter of 2025. Additionally, there are unmentioned acquisitions that have resulted in substantial goodwill on the balance sheet. On the other hand, the company has not engaged in any named divestitures, but industry consolidation and supplier changes may impact business priorities. The company has engaged in share buybacks as part of its financial strategy. Specifically, it repurchased approximately 1.3 million shares of common stock at a cost of $35 million over the 9-month period ending September 28, 2025. This move indicates that the company is using its resources to reduce the number of outstanding shares and potentially boost shareholder value. Concerns over inventory buildup and supply chain disruption. The financial summary highlights several concerns regarding inventory buildup and supply chain disruption. One major issue is the risk of mismatched inventory levels with product demand, potentially leading to excess inventory or stockouts. Additionally, provisions for excess and obsolete inventory indicate potential problems with inventory management. Supply chain disruptions are also a concern due to various factors such as transportation network disruptions, labor disputes, and government regulations. The company's dependence on sole source suppliers could lead to higher prices and limited supply. Furthermore, component shortages caused by increased demand pose another risk. These concerns suggest that the company may be vulnerable to inventory buildup and supply chain disruption, indicating potential risks for the business. That concludes the financial summary for NETGEAR INC. Feel free to comment below, and I will be happy to answer them when possible.